So we're just quickly going to look at the ordinary share capital note, and then I also want to show you guys what we do in our retained income note with regards to our ordinary share capital, as well as the cash flow statement. Okay, so we are doing this ordinary share capital note for the year ended 31 August 2023, which means that your financial year started on the 1st of September 2022. So you want to know for ordinary share capital, you want to know what is my authorized share capital? How much did I have in issue at the beginning of the year? Did I have any additional issue shared? Was there buyback of shares? And then what did I end on at the year end? If we're looking at the information A, you'll see that ordinary share capital has a question mark. So we don't know what that is. So we now need to go and do all the relevant calculations for us to be able to determine our ordinary share capital at year end so that we can then use that in our SFP as well. Right. So looking at the information, it says that ordinary share capital consists of 3 million shares. So in other words, this company is allowed to issue to their customers 3 million shares. Of those shares, by the first day of the current financial year, the company had already issued 1.8 million shares, but we don't yet know at what price we issued each one of those shares, or then the average price of those shares. So we would have to read the rest of the information. Then on the 1st of July, the company repurchased 120,000 shares at R7.20 each. So it's important to note the steps when you do a buyback of shares. So number one is you first need to calculate the average share price on the buyback or then repurchase date. Because you have now included in this ordinary share capital account the price at which you issued the shares. So you can only remove from this account whatever you included in this account. So let's say your shares were issued at R1 each. Then you can only remove R1 per share from this account because you can only remove what you have included in the account. So you can't now remove it at R2 each because then you're going to get to the point where you have negative ordinary share capital. Okay, so first step, calculate the average share price. Then number two, we want to know how much did we pay above the average share price. Okay, the reason for that is we want to know how much did we have to take out of our retained earnings to be able to do this buyback of shares, because we now know the average share price is taken from ordinary share capital. But what about that additional amount? We can't just ignore that amount. So we need to take the amount above the average share price, and we have to take that to the retained income and say, buyback or repurchase, buyback of shares. And this will then have the amount above the average share price. Okay, so let's look at the adjustment. It says that on the 1st of July, the company repurchased 120,000 shares. We can see that in our note already. The shares were repurchased at R7.20 each. And this was 20% above the average share price. Okay, so above the average share price. So they took the average share price, 100% of the average share price, and they said that, first of all, we're going to pay the shareholder the 100% of the price that he gave us. Plus, on top of that, we are going to give him another 20%. So in other words, they said that they're going to give him 120% of the share price. And that amounted to R7.20 per share. So we now need to get back to what was the 100% price that this shareholder paid for the shares. So I'm going to use the amount, the total amount that we paid per share. I'm going to say I want to get back to the 100. I'm working with the 120. And then where's my calculator? go. So it's 120. Oh, what am I doing? Not 120. 720 times, I want to know what 100% is. I'm working with 120. So that is 6 Rand average. So 6 Rand is the average price. That also means that this 6 Rand average price is the average price of my shares issued at the beginning of the year, because the first step in calculating the average price for the buyback of shares is saying whatever I owned prior to this buyback, what is the average share price of those shares? We only had an opening balance. We didn't issue any shares after the beginning of the financial year up until the date of the buyback. Therefore, we can say that if the average price was 6 Rand on the date of the buyback, the opening balance was also an average of 6 Rand, only because no transactions occurred between that period of the beginning of the financial year and when the buyback occurred. So 1.8 million shares at 6 Rand each, so 10.8 million. And then there was a buyback of 120,000 shares at 6 Rand, so 720,000. Remember, it's in brackets because I'm saying I'm removing this. These shares are no longer in issue. So this is the first one, 720,000 Rand that I have to pay. But that's not the only amount that I paid. I also paid an amount above the average share price. So it was 7.20 Rand in total at which this buyback happened, minus the 6 Rand average price. So I paid 1.20 Rand more than the average share price for each one of these shares. So 1.20 Rand times 120,000. So 144,000. In brackets, because I have to take my profits and I have to distribute this to the shareholders for the buyback of shares. So 144. In other words, the total amount paid that will go to my cash flow statement under my financing activities is the total, the 720 plus the 144, because I had to pay 720 cents for the buyback of these shares. And remember that in your cash flow statement, you are looking at the total cash inflows and cash outflows. And in this case, we have a cash outflow of the total amount that we paid for the shares, consisting of the average share price plus the amount above the average share price. Right. Then it also says that 20% of the unissued shares were issued at 6.60 Rand per share on the 25th of August. So on the 1st of September, how many shares were unissued? If we're looking at that, authorized shares consist of 3 million, of which only 1.8 million have been issued. So they are now saying that of these unissued shares on day one of the current financial year, we have now issued 20% of those shares at 6.60 Rand each. So additional shares issued. And then I like to add the amount there at 6.60 Rand. Let's do our calculation. So we started off by getting the information that we have 3 million authorized shares, of which we had already issued 1.8 million on day one. So we still have 1.2 million to be able to issue. Remember, it said of the shares available on the 1st of September. So they're not asking you to take into account this buyback. It's only on day one. And I now issued 20% thereof, so 240,000 shares. 240. Okay, so I issued 240,000 shares at 6.60 Rand each. So we then received, so there was an inflow of money, 1.584 million that we then received for this issue of shares. So this over here will be an inflow of cash in your cash flow statement under financing activities. Nothing in retained income, because remember, retained income is all about the earnings that are retained, that I've accumulated over the years since I started my company. And this does not affect my profits at all. Only when I start declaring dividends will it have an effect. So I started with 1.8 million. There was a buyback of 120,000 shares, and then I issued a further 240,000 shares. So I have 1.920 shares in issue. And then the price minus buyback, so opening minus buyback plus the new shares issued. So the, oh gosh, what did I type in there? 10.8 minus 720 plus 1584. I think I said multiply by somewhere. So this is the amount that I have in my ordinary share capital note. And then this will be in my SFP for my ordinary share capital. So this is the final amount for the SFP. So if we now look at this, let's say there was another buyback after these additional shares were issued. Then I won't use the R6 again, because I have now issued additional shares at a different share price. And that means that my average share price will change. I now have my new ordinary share capital amount, divide that by the number of shares in issue. So see, now it's a little bit more. So my average share price increased by a little bit. So that is now the amount that I would use if another buyback occurs. Because once again, I can only remove what I've included in this account, and what I included in this account resulted in my average share price now increasing. I also just want to have a look at the dividends. Just want to get rid of this. Okay, so first of all, the buyback shares do not qualify for final dividends. That's very important, meaning that when you now calculate the number of shares that qualify for dividends at year end, you have to remember that whatever was included in this buyback, so these 120,000 shareholders will not get dividends. Makes sense because they weren't shareholders at year end. Okay, so it says here that a final dividend of 22 cents per share was declared on the last day of the financial year. So in other words, we started with the 1.8 million shares, then there was a buyback, so they do not qualify for dividends, and then we issued additional shares. So whatever your total number of shares in issue was at year end, those are now the people that qualify for a final dividend. And it is a final dividend of 22 cents per share. So number of shares in issue multiplied by 22 cents. Let me just quickly take this up. Okay. They didn't ask for the retained income note in this question, so I just added this to show a few things that I thought you could benefit from. There we go. Okay, so that is my final dividend declared. Just keep in mind now, if you are doing the cash flow statement, final dividend is usually only declared. It's not declared and paid. So can you see? It was declared. So when you're looking at the cash flow statement, your final dividend cannot be included in your cash flow statement as an outflow of cash, because declaring the dividend is just you making this commitment saying that I will pay you 20 cents per share in dividends. It's not that, yes, I have paid you. So you have to wait until you've actually made payment before you can include the items in your cash flow